Think about what's going to happen to your portfolio or your cash if inflation continues or if the economy crashes. And those are the two outcomes. Either inflation is going to spiral out of control or the economy and the stock market is going to crash.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, it is a pleasure to join you again this week.
Yes, hello, Dave. How are you today?
I'm doing really well. Enjoyed the week off that we had with a little bit of a holiday.
That's right. God bless America.
Yes, indeed. Over the past couple of months, we have watched the U.S. economy slowly erode. The stock market has recorded week after week of losses, dropping the value of retirement accounts. And more, we're hearing financial experts using the R word, recession. So today, in light of a plummeting stock market and a teetering economy, we're going to talk about recession protection. Ken, this is your chance to say, I told you so, but I know you're not that kind of guy. You just want to see people protect their hard-earned savings and investments, right?
Yeah, absolutely, Dave. And all that matters is today. We talked for so long about we went through the biggest stock market move in history for over a decade, and a lot of that was due to printing money and stimulus, and it was fake. And if you had the ability to protect some wealth, if you got it through trading or investing or just being lucky or you inherited it, doesn't matter. The bottom line is this bubble, which is the mother of all bubbles. This is the biggest bubble in our lifetime. It will pop, and it's popping. And it doesn't take a couple of months for the whole thing to play out. So we have a ways to go. More than likely, not in a straight line. We have much lower prices up ahead when it comes to stocks and bonds and dollar currencies and eventually real estate. But there's still time to protect and preserve, and that's what we're talking about today. How do you protect and preserve a portion of your nest egg so all of it doesn't disappear when this bubble finally pops?
So let's set the table by looking at a recent article with the headline, Goldman Sachs calculates a worst-case recession forecast as investors dump stocks and crypto. What is this article telling us?
Well, it's an opinion, but the people who are making an opinion, Goldman Sachs, obviously have the resources to have the best research around, and many people working for them on the research side. So we have to give it some credence. First of all, the article, Dave, it gives a realistic picture of what's happening on Wall Street. You mentioned stocks are declining week after week, and they are. We'll bounce from time to time, but very, very weak, to have such a fall of over 20% and then barely any bounce at all. That's not a good sign. So saying that, it's as bad as investors have seen it over the past decades. And things could get a lot worse. They can get much worse, according to what the article is saying. They say that we hope, okay, we've talked about that many times. You can't invest or, bet your nest egg on hope. Well, they hope we can pull out of this tailspin, but they warn that a full-on recession could slam the U.S. economy, meaning stocks falling a further 10% to close out 2022. And 10% may not sound like that much, but most stocks, the ones that move anyway, they're down 60, 70, 80, 90%, most of them. It's a bloodbath out there. And basically the only stocks that are moving these days are energy stocks, Dave. And that doesn't, pose well, especially when oil is $115, $120 a barrel, and some gas out here in California is over $7 a gallon. But we'll get to that a little later.
Yeah.
Goldman Sachs former CEO and current senior chairman he appears to be on the banking, to be banking on the latter scenario. On a Face of the Nation interview, he said that there's a very, very high risk that the American economy will slump into recession. Now, don't forget, Elon Musk just said that the American economy is headed towards a horrible situation that many don't realize will happen. And Jamie Dimon, the head of JP Morgan, said that an economic hurricane is on the way. So, there's a lot of stuff that's going on out there. I would say that you need to be informed. This is very serious. It's a very serious warning, and people need to take it seriously.
So then, if this worst case scenario comes to pass, what will that do to people's retirement accounts?
Well, we're already seeing inflation, Dave, rip away purchasing power. People who thought that they had enough to live on are obviously now backpedaling. They obviously see what's going on with prices, and maybe their income stream is not going to go as far as they thought. Okay, that's purchasing power. But when stocks fall and bonds fall, and don't forget, where did we come from? We've just gone through over a 30-year bull market for bonds. No, trees don't grow to the sky. They can grow high, but they don't grow, to the sky. Stocks, on the other hand, just went through the best decade in the history of the stock market. And it's not good organic growth. It's money printing. It's easy debt. It's easy money. It's companies doing financial engineering and buying their own shares back while insiders dump stocks at high prices. It's a messy casino. We've spent a few shows on that where it's very, very risky. So the retirement accounts that people have right now invested in money markets, bonds, stocks, mutual funds, and different types of paper assets. Remember, paper assets. When this economy falls apart and when the markets fall apart and bursts, these retirement accounts that are invested in paper, which is not diversification, are going to get killed, and they're going to lose a lot of value. Now, they may come back, but according to history, sometimes it takes 25, 30 years for markets to come back to a point where we reached a prior peak. Not everybody has the stomach, the wallet, or the time to wait 25 or 30 years. Not everybody has the stomach to see half, three quarters, 80, 90% of their paper assets and their accounts value disappear and hope that it comes back. That's not a way to run a portfolio. So diversification, wealth preservation, instead of seeing it all drawn down, diversify a little of it, diversify some cash, diversify some of your stocks, diversify some IRAs into physical gold. Gold you hold, and that should make up for a lot of the other losses that their retirement accounts will see.
A reminder here that you're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is recession protection. Ken, in light of increasing warnings then about a coming recession, what can gold do to protect against the effects of a recession?
Well, we've mentioned it a couple of times already, Dave, and hate to be a broken record week after week, but to protect nest eggs, to protect purchasing power, to protect wealth from a recession, depression, stagflation, inflation, deflation, whatever you want to call it, you have to have something that will always have value, something that you could hold on to. So one of the main tangible assets that's always been money all the way back to the Roman Empire over 3,000 years is gold, and physical gold, gold coins, gold bars. So in order to protect yourself from a possible recession or depression that's coming up from all of this stimulus and money printing, one thing that people can do is take a portion of their assets. They can call us, everyone's a little different. Take a portion of their paper assets, move it sideways, tax-free, into physical gold, coins and bars, and silver as well. And that's kind of what we're talking about. How do you preserve your wealth with physical precious metals?
You have maintained that in times of economic turmoil throughout history, gold has held its value and preserved people's wealth, that it is recession protection.
Well, that's exactly what it is. And for this particular response, Dave, I wanted to bring up an article I read recently. There's a gentleman I follow in Switzerland. His name is Egon von Geiritz. He runs Gold Switzerland. And I'm going to read a little quote that he just wrote about because I think it sums it up perfectly. Gold has been one of the top performing asset classes in this century, and still nobody owns it, with only about 0.5% of the world's financial assets actually invested in gold. Most investors don't follow gold since the banking and investment management industries neither promote gold or understand it. They obviously don't like to recommend physical gold since it doesn't lend itself to commission churning. Anyone who has studied history would know that no currency has ever survived in its original paper form except for gold, which is obviously not paper. Every single paper currency has gone to zero. But the death of money is a slow and gruesome process that takes place without anyone notices. It seems that things are just getting dearer due to inflation, and no one understands that this is the consequence of money and debt creation leading to currency debasement. The world has never previously experienced a time when every single major economy, as well as every emerging country, are all indebted to the hilt. If that doesn't just get right to the root of the point, I don't know what does. So
Wow.
diversify into a little gold. Don't be financially ruined when this all blows up.
You're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is recession protection. In a moment, we're going to look at a specific precious metal that you can use to safeguard your wealth, and that's coming up right after this.
Consumer prices surged 8.5% in March. Wholesale inflation surged 11.4%. Sebastian Gorka here. The markets recently reacted to runaway inflation and drastic measures by the Fed by dropping up to 1,000 points in a day, which is why I recommend diversifying with physical gold from the only company I trust, Midas Gold Group. Call Midas Gold Group at 855-322-GOLD. That's 855-322-GOLD. It's gold you can hold.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is recession protection. By the way, if you live in the Los Angeles or Phoenix area, we encourage you to come and visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Ken, we now turn to look at a specific gold product, and we've been talking about a storm cloud, in fact, many storm clouds that are hovering over the U.S. economy. But today, our featured gold coin, well, you might say it's actually a ray of sunlight, isn't it?
Yeah, Dave, it is indeed. You know, one of my favorites, if not my favorite, I know you like yours, for wealth preservation. It's the gold American Eagle. And it's the preferred government-issued bullion coin of American investors. It's made by the U.S. Mint. So this 1-ounce gold coin, Dave, was first authorized by Congress in 1985. Remember, folks, the United States didn't make any gold coins from 1933 to 1985. So there was a period there where there was no U.S. minting of U.S. gold coins. And this particular coin was an instant smash. It reached iconic status almost overnight. And interestingly enough, Dave, the gold American Eagle bullion coin gets minted at relatively modest rates, you know, at an average of about $1 million a year, I believe, somewhere in that area, maybe a little bit less, maybe a little bit more. So any chance to pick up this classic bullion coin should not be overlooked for wealth preservation.
Can you maybe describe the coin for us? I know you really love its design.
Yeah, sure, Dave. The gold American Eagle, it's 22 karat gold, so that's 9167 fine. It does contain an actual ounce of gold, but there's a little copper in there and a little silver, which makes it extremely durable and strongly resistant to scratching. It's the largest gold coin struck by the U.S. Mint. Keep in mind, Dave, that it actually weighs a bit over 1 troy ounce, which explains the slightly lesser percentage of purity, despite maintaining a rating of 22 karat gold. But here's what I love most about the gold American Eagle. It's patriotic, Dave. It has an all-American design. It features the iconic Walking Liberty design of Augustus St. Gaudens on the front. It's a throwback to another classic American coinage, which we've talked about many times, the St. Gaudens $20 double eagle, which was the $20 gold piece from 1907 to 1933. So the reverse side features a bald eagle bringing an olive branch to the nest of a mother female guarding her hatching babies. It's really a beautiful design. That's type 1 gold eagle. Remember last year we received also a different backing called a type 2 gold eagle, which is actually just the side profile, the head of a bald eagle. The gold American eagle is actually legal tender. It has a $50 face value, but as we know, audience, it's worth a lot more than that. It's based on the weight and the purity of the gold. It's worth probably 40 times more than, a $50 face value. So to make sure you don't bring it down to the In-N-Out or the McDonald's or the Arby's and use it to buy dinner. I believe that the gold American eagle, it's a surefire bet, Dave, in this gold bullion market. It's IRA eligible. You could hold it. You could move paper assets into the gold American eagle, take delivery of it. It's something you could be proud of. It's a privilege. And we do feel it's a quality coin that when gold does well, this should do really well. So we see a potential for a big return as well for the gold American eagle.
And you have these available?
We do in brilliant uncirculated condition. They usually come in tubes of 20, right directly from the U.S. Mint. It's a beautiful coin. If you can do it, it's a privilege. Give us a call and we can discuss some of the options, whether it be taking delivery of the gold American eagle or putting some in a retirement account.
Ken, thank you so much. Coming up in a moment, we're going to continue talking about recession protection with Ken Russo from Midas Gold Group, and that's coming up right after this.
The gross domestic product, the GDP, declined in the first quarter of this year at a 1.4% annualized pace, marking an abrupt reversal for the economy. Many financial experts believe that 2 straight quarterly declines mean recession, which is why I diversify my investments with physical gold from Midas Gold Group. Gold traditionally holds its value when the dollar falls and economies fail. Sebastian Gorka here. I know from experience that many factors can unexpectedly cause sudden market downturns that can rob you of your retirement security. I recommend calling Midas Gold Group to talk about safeguarding your wealth with physical gold. Don't wait until inflation devalues your savings. Diversify your investments today with physical gold and precious metals with the only gold company I recommend, Midas Gold Group. Log on MidasGoldGroup.com, then call them at 855-322-GOLD. 855-322-GOLD. It's gold you can hold.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. Our topic today is recession protection, a very important topic in light of the economic times we live in. By the way, if you live in the Los Angeles or Phoenix area, you can actually come and visit us in person at our local office. For the address and directions, just log on to our website, MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Now, let's return to our topic today, recession protection. Ken, we've been looking at the strong possibility that the U.S. economy could slip into a full-blown recession. And I know that your heart is with our listeners who have their retirement income resting on the health of the stock market. If they heed the serious warnings and move a substantial portion of their investments over to physical gold or to a gold IRA, and we do not have a recession, if somehow, miraculously, we recover from rampant inflation, have they lost anything?
Well, there's always the potential to lose on any investment. You should have a time horizon, but gold typically makes up for those losses that the paper markets went through. So think about it. If you move some of your paper assets into physical gold, but you leave some of it still in dollars, or you leave some of it still in stocks or mutual funds or bonds, if those markets are eaten alive by inflation, which we believe it will, the gold portion of your assets will make up for those losses. So when you look at it that way, we're doing this so you don't always continually push all of your chips, Dave, in the middle of the table. If you continue to push all of your chips into the middle of the table, hand after hand, eventually you go bust. So don't think so much about, am I going to lose money if I buy a little gold? Think about what's going to happen to your portfolio or your cash if inflation continues or if the economy crashes. And those are the two outcomes. Either inflation is going to spiral out of control or the economy and the stock market is going to crash. So either one of those scenarios is very good for gold, and gold should make up for the losses that investors have in all those other markets.
Ken, another article I came across said U.S. producer prices jump 11% as cost of food soars. That's the second straight month of an 11% or greater increase in wholesale prices. That can't be good.
No, I mean, it signals where the consumer prices are headed, Dave. We've been dealing with consumer inflation in the last 8%, 10%, for the last few months. It's the highest in 40 years. My contention is it's been a lot higher for a lot longer, but people are just kind of noticing it the last couple of years. We've talked so many times about the purchasing power of what you could have bought with a dollar back in the 70s and 80s and what you can buy today. So, I mean, it's currency devaluation. But, I mean, can you imagine the impact of prices to cover things that it's going to be over an 11% increase? I mean, businesses have to raise prices to cover their costs. So we just can't say, well, let's just push costs, to the consumer. They'll pick it up. Where's everybody going to get all this money? Imagine groceries, gas, housing. I think the price of natural gas went up 10% yesterday. There's craziness going on, and it's not going to just turn around, folks, and end. And these prices are not going to just go back down to where we were 2 or 3 years ago. It's not going to happen. So people need to wake up. They need to understand our leadership is abysmal, leading us in the direction of every possible wrong way. Every day, it's a downward spiral. And the question is how much could we protect before it bottoms out without losing it all? How much could we protect before it bottoms out without losing it all? And that's where gold comes in, Dave. That's where it's always come in.
Is there still time then to move investment funds or cash into gold?
We've stated many times, Dave, that the price of gold, even under 1900, has not reflected all the money that's been printed. The price of gold has not reflected inflation. The price of gold has not reflected all the currency debasement that's going on, all the fakeness in the economy and in the monetary system. Gold today is still as cheap, if you consider all those things, as it was back in 2000 at around $250 an ounce, and back in 1971 at $40 an ounce. The hourglass is tipped, but there's definitely still enough time, Dave, to move some investment funds or cash into physical gold bars and coins.
And it is guidance like that as to why I personally own gold from Midas Gold Group. Ken, thank you so much. That is going to bring us to the end of our time together today here on the Gold Standard with Ken Russo. And I might add, all too quickly, I wish we had a lot more time. It's brought to you by Midas Gold Group, and I have a reminder. Opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com. Go take a look at it. MIDAS, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Ken, thank you for your time again today.
My pleasure, Dave. Have a great day.
Thank you. You too. I'm Dave Dino. Come and join us again next week at the same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.